In this trading method strategy reference video, we're going to focus on 3-chart trading. That is using a price chart, a Renko Brick 1, and a Renko Brick 2 chart. We're going to especially discuss what is the purpose of 3 trading charts, Renko charts for trade setup simplicity, price charts to show price and momentum that Renko charts don't show, and price charts to show market conditions that Renko charts don't show. Now I know that I mentioned this before, and no doubt we'll mention it many more times. The Renko chart trade setups are very easy to see, making one of my primary training objectives one of showing you which Renko trades to avoid and why. So what is the purpose of using 3 trading charts? Well, with regards to the Renko charts, yes, absolutely. The Renko charts are being used because you can see the trade setups very clearly, and that includes while trading real time. Let's just take a quick look at these 2 charts. We're going to start at the price high. Where do you see Renko trade setups? I see one at the yellow circle on the right chart, and I see one at the second yellow circle on the right chart. There looks like, a couple more patterns where right past yellow circle 2, there's another 3-brick pattern, but MEX is crossed by then, so that wouldn't be a Renko trade setup. And then you see a 4-brick pattern, and MEX is actually going up, so that can't be a Renko trade setup. Now let's look at the left chart. What do you see? Again, we're starting at the high. Okay, here's one. And right next to it, those 2 yellow circles. So on the left chart, the 2 yellow circles, which would both be buys, are Renko trade setups, and the 2 yellow circles on the right chart. So with regards to using 2 Renko charts, the left chart is brick 1, the right chart is brick 2, and we are especially wanting to ensure that we don't miss a swing like that big sell swing you can see on the brick 1 chart that is a price envelope reverse only. By using a brick 2, which is a faster brick chart, a lot of those trade setups will be seen just like yellow circle 1. So using Renko charts, purpose is simplicity of setup, along with 2 speeds of charts, so that if the slow chart doesn't give you a setup, ideally the fast chart or the faster brick chart will. On the other hand, why do we include that 3rd chart, that price chart? Again, you know that these Renko bricks are not real prices, so we want to be sure that we don't miss real price. And along with that, we want to be able to see momentum. There are times where, for instance, look at the brick 2 chart and yellow circle 2. Now, yes, MEX is extreme at that point, but it hasn't crossed yet. And there are reasons to take that trade. Look at this yellow line. And the way the green brick retraces back to that yellow line and rejects it. With MEX flow, you get a shift reject continuation trade. But what if at the same time the price chart showed you that that was counter momentum? Are you going to take a setup from your fastest chart when you see that it's really counter momentum on your price chart and a slower chart? And my answer is no. I would not take that trade. Let's look at yellow circle 1 and 2 on the brick 1 chart. Okay, you're not going to take yellow circle 1, correct? Because even with the Renko chart, you know that it's directly into a double top. So you're not going to take that trade. But what about brick 2? Well, when I say that the price chart shows you market conditions, are you aware that you are looking at consolidation? Is that clear to you on the brick 1 chart? And that yellow circle 2 is actually a consolidation trade. Now, the issue here is it a consolidation breakout setup? Meaning that it's a midline reject with MEX flow into a triple top breakout. Now, if you're saying that you don't really see the midline reject, I can actually agree with that. But if you are just not being so anal about where it's hitting the midline and you get the sense of a reject there, you definitely have MEX flow, and it definitely is a triple top breakout. Would you take that trade as a consolidation breakout? Do you even know that that's consolidation? So those are things that we're using all three of these charts to get a better look at. So let's throw in a tick chart here. So here is the brick 1 chart with the tick chart. And to begin with, I got a yellow dot sell on the price envelope reverse, but you know that that is a brick 2 chart. That chart, or that trade, syncs with the yellow circle on the tick chart, and we've talked about this. Is that maybe a bar before you actually get the TTM turning red? Probably, but is that something that keeps us from taking one of the Renko trade setups? Is that against directional strength? And my answer to that would absolutely be no. We get to our profit target, which essentially is this yellow square. Now this all syncs with the second yellow circle on the brick 2 chart. And I was talking about, would I take that trade? And it would have to do with the momentum read. on the Renko or on the tick chart. So, what are we really seeing? I would suggest we are really seeing a stall at that yellow line. Here's where the Renko brick 2 would be synced. Now, I want you to look at MEX as well as TTM. And I'm going to ask you if you can take this trade. Again, the yellow line is a shift reject with MEX flow, or is there a momentum extreme there? And the thing I want to mention, I believe it was the last video I mentioned this, and we're looking at MEX and TTM extremes. What we want to avoid is trading when TTM does not confirm price. Okay? And I'll give you a great example of that. Look at this next yellow circle I'm drawing. Would we ever take that trade? And the answer is absolutely no. Why? Because TTM is not confirming price. You had your TTM low at the yellow square. Now if you buy the yellow circle, you're going to take that against TTM that doesn't confirm price. And what does that mean? That means that you are trading into a price momentum divergence, which is why you would never take that trade, which is why on that brick 2 where I didn't even circle it, but I mentioned there was a 4 brick pattern, but we would never take that trade. On that chart, MEX had crossed and was rising, but on your price chart and reading momentum, you would never take that trade. It's into a PMD. On the other hand, the blue dot doesn't give you the same read. Momentum has been confirming, meaning that the blue dot could break out and momentum could go lower. And you can see MEX has never crossed, okay? It hadn't even pinched. So at the very least, I would never take a partial at the yellow box on the Renko chart. I would at least extend my profit, see if I can get, a further breakout. And doing this has been worth over 20 more points simply by reading the price chart for momentum. I asked you whether you could tell on the Renko chart. Would you be able to tell that you were in consolidation on that chart? Well, you certainly can on the price chart. Again, a primary reason. Consolidation is a market condition. We want to avoid trading inside a consolidation. We want to avoid trading until there is a breakout setup of consolidation. Trading past consolidation versus inside a consolidation. I would suggest on the Renko chart you actually feel like if you notice consolidation that you are taking consolidation breakout setup. We know better on the real price chart. That yellow dot on the Renko chart would be this yellow circle on the price chart. You can tell me that that is a midline or a center line, center area, whatever you want to call it in this case, reject with MEX flow into a triple top breakout, which is what the Renko chart is showing? The answer to that is absolutely no way. That, looking at a real price chart, would be a breakout only, and that would still be into a consolidation double top, wouldn't it? Okay? Those are real prices. The Renko chart isn't showing those. You don't have a triple top setup. You have a consolidation breakout into a double top. And even worse, let's say that you did have a triple top, and again, you don't. But let's get rid of this circle for a minute so you can see this other line. You're trading directly into resistance at that yellow-blue line. Okay? So, what is possibly so clear on the Renko chart is a trade that the price chart allows you to avoid, thereby avoiding a losing trade. And for management on a 2-contract or 3-contract trade, okay? Well, the way the partial has been expanded and going into the price chart PMD, I may be repeating myself here a little, forgetful here from after that phone call. Okay, what I was saying is 3-contract trade. And you've expanded your partial. Just forget about the add-on. We at least expanded the partial. You've traded into a PMD, as we discussed, on the price chart. This is definitely a situation to take 2 partials. Okay? So you are able to get short at 16266 and expand your partial all the way down to 16245, 21 points versus a target of 16238. Okay? The PMD, I would take 2 partials. Now, the exit. Where are you going to exit your trade? Where do you normally exit your trade? I'm guessing that most people simply are holding until a Renko reverse. That would be like this yellow circle. I would not exit the trade in this case. Not that close to resistance and where the trade could hold. You know, if you're talking about, 3 bricks to resistance after the price envelope reverse, that's a whole different story than what I would say is directly into resistance. So I never exited the trade for the reasons discussed. Have 2 partials do absolutely nothing across consolidation, including the yellow dot, which again would be the yellow circle on the price chart directly into resistance, still short at the last tick bar on the chart.